All right, welcome to the weekly prep video for June 30th to July 3rd. We have Friday off because it's the 4th of July, which is always nice having a shortened trading week. In this video, I'll be going over what the indexes, leaders, and industry ETFs did last week, and then end the video with some long and short setups. I've got 12 long setups, 10 short setups to cover. All right. Starting off, we have QQQ making all-time highs on Friday, ending the week up 4%. Just a very, very strong week. We had that shakeout on Monday under the 20-day EMA and the support gap. Whenever you come into a support gap like that and a key moving average, you're going to get directional. You tend to get directional shortly after. We had a little bit of friction at that area on Friday, a nice clean undercut and rally on Monday, followed by a gap up on Tuesday. That kind of action, undercut, reclaim, gap up, tends to lead to a very powerful uptrend, and vice versa if it happens on the short side. So great action out of the Nasdaq making new highs. S&P 500 made new highs on Friday. Similar action, undercut of that 20-day EMA and support gap on Monday. Had a little bit more overhead than the Nasdaq did, the QQQs did, to get into new highs, but we did manage to do that on Friday. So congratulations to everyone who thought that that we were going to get back to all-time highs this quickly. I'll be honest, I did not think it would happen that quickly, but I'm glad it has. April 7th, we put in a low in the market, and only, what is it, 2.5 months later, we're back at all-time highs. Just incredible action out of the market and out of the general leaders that we'll cover in a bit. IWO, this is the growth ETF, so the growth stocks within the Russell 2000. This tends to correlate the most with my trading, and that's why I cover it each day. Higher highs, higher lows, closed above the 5-day EMA, made new highs for the rally, but you can see some general weakness compared to the Nasdaq, compared to the S&P 500, which this group typically does have relative weakness compared to those. So overall, whenever it's in an uptrend over the rising 20-day EMA, it tends to be a good environment for swing trading growth stocks, and that's where we are right now. We're not extended. We have a little bit of air to the 10-day moving average, which is right on top of the 200-day, but we had that gap up on Tuesday, tested it on Wednesday, then started to follow through to the upside the rest of the week. So great action there. ARKK, another kind of ETF that I use to feel out how the market's going to be reacting to growth stocks. And you've seen how powerful it's been since that April 7th low, going from 39 all the way up to $70. So rough calculation, about 80%, 85% there. Good action on Friday. We undercut the support gap below the 5-day moving average, closed kind of middle of the range. Actually ended up down 1.7%, but finished the week up 3.1. Whenever you're closing over the rising 5-day moving average, you can't be too picky. Just a little bit of chop here. And then Bitcoin, we're using BTC to go over Bitcoin. Higher low being put in potentially after we tested the 50-day moving average, had that great shakeout on the 23rd, rallied back through the 5, the 10, the 20-day EMA, and really tight action, pulling back into those key moving averages. Exactly what you want to see after a consolidation, and BTC was up 3.5% last week. Next, we'll take a look at the 9 liquid leaders that we've been tracking. We did switch out one this week. We switched SMR out for NVIDIA because NVIDIA made new highs. It's the liquid leader in the semiconductor space. So we added that back to the long watch list, or sorry, the leaders list. Sorting this by price percent change current week, GEV. Oh, sorry, no. There we go. NVIDIA was the leader, up 9.7%. You can see multiple gap ups and plenty of like subtle gap ups as it was building this pivot out. Had that shakeout on Monday, followed through Tuesday, Wednesday, Thursday, and Friday, new all-time highs. Whenever the king of the market is acting well, the rest of the market tends to follow, and our king is back at new all-time highs, which is great to see. Spotify, another monster week, up 9.2%. Had that ignite candle on Thursday, up 5.4%. Basically, just tight trading action on Friday. We have some air to the 5-day moving average. So, some consolidation here while the 5-day catches up, while the 10-day gets over that gap zone would be perfect. Pulling back into the 10-day in gap zone on any market pullback is going to be an area of interest to me. GEV, 6.85%. Closed a little bit weaker in the range on Friday, but still closed at a new all-time high. Extremely strong action. Another stock that had a pullback into a support gap on Monday. This one slightly above the 20-day EMA, but you can see we undercut that, rallied up, closed well, and then the rest of the week chopped a little bit and had a good day on Friday, finishing Friday up 2.6%. Robinhood down 1.8% on Friday, still above the 5-day EMA, ending the week up 5.8%. Just chopping while the 5-day EMA catches up is exactly the type of action that you want to see out of a leader after an expansion bar that we got on July 24th. Great undercut of the 10-day EMA, followed by a gap up and strong close on Tuesday. That's perfect action. You couldn't ask for better action there. And the fact that we're just consolidating instead of rolling over, A plus action out of what I think is the liquid leader of the market. I know I said NVIDIA was the king because it's institutionally the favorite, but Robinhood is probably, I would say, competing with NVIDIA for like leading the market. And as a growth stock trader, I don't have millions and millions of dollars to get into the market. Robinhood is acting a little bit stronger overall. CrowdStrike, good week, up 4.8%, down a little bit on Friday with an inside candle. Um, Touched off the 5-day EMA, closed middle of the range, not doing anything wrong. Great response on Monday with the undercut of the 20-day EMA into the support gap. That's why I have these subtle gap up zones drawn because they tend to be reversal areas or do or die spots for the stock. And when you're really tracking the liquid leaders, the do or die spots tend to be the best places to get involved in the stock with really low risk because you get your stop 1%, 2%, know that if it's going to follow through to the downside, you don't want to be a part of it anymore. And if it does work like it did with CrowdStrike, then you have an awesome cost basis with very, very tight risk management that you can size into with reasonable size to boost your performance. So this one, not doing anything wrong. That's the way we like to see it. Zscaler up 4.1% for the week. Just another like 4 days of really tight trading above the rising 5-day EMA. Between CrowdStrike, cybersecurity, I think, is one of the leading groups in the market right now. There's actually plenty of leading groups. The market's extremely strong, but I do think cybersecurity is one to focus on. So that's why we got two of those stocks in the leadership group. RBLX, Roblox. If it's a day that ends in Y, Roblox is going to be up, and it was up another 0.5% on Friday, ending the week up 3.4%. Just a pure uptrend, rising above the rising 5-day EMA on uptrending moves. Any pullback gets supported at the 10-day EMA, and we have a support gap right at that $100 area. So a pullback into that area, undercut the 10-day, undercut $100, undercut the support gap, and respond to that area is a potential buy point. With the market getting a little extended, if we go through like a 3 to 6 day pullback in the general market, this 20-day EMA and gap zone at $97 is going to be a key spot for me to watch. Palantir, one of the uglier moves of the day on Friday, down 9.4%. A lot of it happened right at the end of the day. We ended the week down 4.8%. As you can see, massive volume on the way down. We broke below the 5, the 10, the 20-day moving average, closing right on the low of the day. After hours, it's trading around that 135 area, right around the 20-day EMA. And we've seen it happen before where we have an ugly close followed by a gap up that reignites the uptrend. That's still on the table for Palantir. If we get a gap up, strong close, and then follow through, chances are that this just reignites the uptrend and we continue to make new highs. But usually the first couple times it does that is the spot that you want to buy. The second one, third one, it tends to get a little bit later in the cycle. Maybe we have a little bit more turbulence here. And then CRWV down 12.9% on the week. Ended Friday up 1.2%, but you could see a weak closing range. One of the only leaders that has a gap down to deal with overhead supply. We lost the 5 and the 10-day moving average on Wednesday, followed through to the downside a little bit on Thursday, tried to bounce back on a strong day on Friday, but still closed relatively weak. Kind of feels like this is losing a little bit of momentum, but if we do close back through the 5 and the 10-day moving average, I could see this continuing to rally here. But what we don't want to see is follow through to the downside, a loss of the 20-day EMA, just like Palantir. Next, we'll go through the industry ETFs. I've got these sorted by the price percent change for last week. Because it's the weekend recap, I'm going to just go through each of them. So it might be a little bit longer video, but that's what the weekends are for, right? So SMH Semiconductor ETF, that was the leader last week, which is great to see. Whenever semiconductors are leading the market, tends to be a good market to be trading in. Up just about 7%, closed above the last gap down zone, and we're right near all-time highs. Monster move, undercutting that support gap, 10-day moving average on Monday, then just following through the rest of the week, following NVIDIA's footsteps. BLOK, this made new highs on Friday, ended the week up 6.4%. Got a little air to the 5-day EMA, lower volume close, which is what you want to see on any red candle closes over the 5-day EMA. You want to see it with lighter volume, just so it shows that it's not a distribution bar on the way down, just more consolidation here. TAN, the solar ETF. Whenever this starts to lead, I tend to be a little bit nervous with the market. If you take a look at other times that we had a nice week or 2 weeks with the solar ETF, that has signaled kind of the end of the rallies in the past. Why I think it might not be the same this time around is solar had bad news. Their tax credits are getting washed away. We had this gap down last week on the 17th, where we ended the day down 9.3% for the ETF, which is a lot. And instead of following through the downside, we put in a higher low into the 50-day moving average and then rallied the rest of the week right back into the 200-day. So when stocks typically top on good news, they typically bottom on bad news. The fact that it had basically the worst news that the industry could have, their tax credits being eliminated, and it gapped down, but it didn't follow through, kind of shows me that sellers are exhausted in this space, and it could be a group that turns it around in the second half of 2025. So even though it is up and we're a little bit extended on the indexes, some leaders are extended, it is kind of a warning sign that I have my antennas up, but the group itself, I think, could have a nice end of the year. Robo, this is just the robotics ETF, had some relative weakness the last couple weeks, but last week really put it into motion, up 5.6%. Major base here that we're getting back to the previous highs of. If that can get going and the market stays in its speculative mode, I think this could be another group that we have some high alpha names to focus on. FDN, this is the Internet ETF. Thing I like with DeepView is if I ever forget what's in that ETF, I could just click on the H and it'll bring me to the holdings. So you see ANET, Dash, Net, Meta, Netflix, and you can see the percent holdings as well to see what's in there. So a lot of Meta, and that makes sense because Meta has been acting well. But FDN right at all-time highs, highest closing price ever, which is awesome to see. Another group that is kind of a signal for risk on versus risk off. The fact that it's over a rising 20-day EMA shows that it's been a strong market. IYT, nice close into the resistance gap. We really want to see this get through that. Otherwise, we're just uppercutting and failing at the 200-day moving average. This is the transportation ETF. PEJ Entertainment ETF, really strong action Thursday and Friday, closing right at the high of the day and the high of the week, up 4.3% last week, getting near all-time highs. IYZ Telecommunications, new highs, new 52-week highs, up 4%, just running that 5-day EMA after Monday's undercut of the 20-day moving average. ITB Home Builders ETF, still one of the weaker ETFs in the market, but we are starting to get a launch pad set up where the 5, the 10, the 20, the 50-day moving average all is coming up under price and starting to curl up. Kind of shows that sellers are getting exhausted. We're putting some higher lows in this base, but still not really a group that I'm going to be focused on until we get the Fed cutting rates, because until Fed cuts rates, it's going to be really hard for new home buyers to actually go out and purchase a home. Without that type of buying demand, home builders themselves probably not building a bunch. So want to see interest rates fall and to get this group going. ITA, this has really been the leading stock or leading group in the market since we bottomed. back in April 7th. This is the Aerospace and Defense ETF, another new high. It basically had this frozen rope where it traded above the 5-day EMA for multiple weeks, went sideways, touched off the 20-day moving average twice, and then as the market got strong, this got strong as well, ending the week up 3.9%. XLY discretionary ETF, consumer discretionary. Great consolidation here, gapped up, closed right at the high of the day. It looks like this is breaking out of the base here. Just another group that's joining the rally. KWEB, this is the Chinese Internet ETF. I think this is another group that is going to be a focus for the second half of 2025. You see a multiple year base from 2022 up till mid part of 2025. Had that shakeout and really starting to tighten up here. Now, what could get this into motion is if we do have a trade agreement with China or any type of news that really sees a huge volume move to break out of this base. Once that base breakout is triggered, this has so much time built up that you can see a nice sustained rally out of the group. So we want to be focused on some of the leaders in the Chinese space because it's a group that hasn't really gotten going yet, and when it does, it should have some legs to run. Cybersecurity up 3.4% last week, touched off the 5-day EMA on Friday, closed middle of the range, kind of tracing what's blinking on it now. Sorry. CrowdStrike. What CrowdStrike did with that undercut of the 20-day EMA, reclaimed it, and then closed right near highs. XLF financials up 3.1%, closed lower in the wick on Friday. So still some resistance right at all-time highs. Pullback into the support gap, into the 20-day EMA for a higher low would still be healthy. IGV, this is the software ETF, outside down day on Friday on an uptick in volume, but still closed right at the 5-day EMA, so it's not doing anything horribly wrong. Want to see how it responds to this gap zone in the 20-day EMA on any market turbulence. NLR is the nuclear ETF. Once again, touched that support gap above the 10-day EMA and then closed right at the 5-day. Still think this is a group to focus on. It is wild. All the components in the group is pretty hard to trade overall, but the ETF itself is trading much smoother than the individual pieces. So above the 10-day, it's still quality to me. Above the 20-day, it would still be in an uptrend. XLB, this is materials ETF, uppercut the resistance gap and kind of failed there on Friday. Still ended the week up 1.7%. We got the 20-day EMA and gap zone to hold for potential support. Otherwise, this could be a lower high and potentially rolling over. XME, this is mining, metals and mining ETF. Gap down on Friday, still closed at the 5-day EMA after undercutting and bouncing at that support gap, and the 10-day EMA finished the week up 1.2%. XLV is the healthcare ETF, continues to be one of the weakest groups along with ITB in the market. Can't close over the 50-day moving average while the indexes are at all-time highs. That's just horrible relative strength, lots of relative weakness in that name. So not a group that I want to be focusing on trading long. XBI is the biotech ETF, still some relative weakness, can't get over this resistance gap from March 28th to the 31st. As long as it holds the 20-day EMA, it could still be in an uptrend, putting in a higher low here. But if we follow through and then test the 50-day, I think it's going to be in trouble. XRT, end of the week up 0.5%. Still having trouble with this resistance gap after the gap down on the 12th there. Have the 200-day moving average supporting it twice so far. Those are the two spots that I'll be watching for to see if the uptrend continues or if it's starting to roll over. And then XLP, this is still weak, down 0.6%. Big base here that seems to be rolling over. So unless we have an undercut and just rip higher, I tend to think that this is a group that we don't want to be focusing on. The 200-day is starting to roll over, 50-day is starting to point down, and we have relative weakness, so not ideal. GDX, really ugly action on Friday with a major gap down after we closed over the 5, the 10, the 20-day moving average on Thursday. We did undercut and bounce at the 50-day moving average. We held the support gap slightly, but it kind of seems like momentum's just running out for gold miners. We had a very small new high and then immediately rolled over. So that to me is just an uppercut and failure at new highs, which is not ideal when you kind of tie in that we had another gap down. So we had a gap down off of highs, second gap down, rallied up into the resistance gap, and then gap down again on Friday. So just not ideal action out of that group, not something that I'm focusing on. Two more, XLE, still relatively weak, closed under the 20-day EMA. Ugly bar on the 23rd, back through the 200-day moving average. Mini rally back to the 20-day, and now having trouble there. And then XOP down 5.4% with that big bar on Friday, down 4.1% through the 200-day moving average, and then just kind of a bear flag since then. Next, we have our 12 long setups, and I'm going to adjust this so we go by price percent change. So AS, this was on the long watch list going into Friday, and I just completely missed it at the open. I was busy at the open, but great action. Exactly what you want to see. We had a couple inside days over the HVC level, over the 10-day moving average, got nice and tight, gapped up, pulled into the 5-day, and then rallied from there up 4%. For this, I'm looking for a pullback into that gap zone from Friday. Hopefully, by the time it does that, we have the 10-day moving average catching up to that $38 zone. So then we'd have an undercut and rally of the 10-day and the gap zone, and then just playing that with a stop under the HVC level, high volume close. CORZ, this had the highest volume ever on Thursday, up 33%. Had a little bit of follow through on Friday, but you could see a previous resistance gap. We gapped over that, sold off a little bit, sold off under the HVC, and then closed above it. What I'm looking for in this one is either gap up or gap down, doesn't really matter, but just to pull it back into the HVC level at 1635, and then just play that on any kind of bounce with a stop under Friday's low, under $16. Whenever you have an HVC in a name that has shown historically that it can move, which CORZ has done from $3 up to $16, something that you want to have on your watch list, especially where we're at in the market with risk on, with indexes making new highs. ELF, this has been on the watch list for multiple days now. Just looking for a pullback in that 20-day EMA and the support gap at 116. Undercut and rally of that zone would be buyable. Some people would buy this through Thursday's high, Friday's high, which you could do with a stop at the 10-day EMA. But with the indexes a little bit extended, I'm more so looking for a pullback buy on this one, especially because if we zoom out, ELF isn't making new highs. It's rallied a ton off the lows, over 100% off the lows, but there is some overhead resistance here. And whenever you have that, I tend to like to buy them on undercut and pullbacks a little bit more than on strength. NVTS, this is a name that I had bought, got stopped out on the loss of the 10-day, let it kind of trade sideways, volatility picked up a bit. And then on Friday, we finally got a nice tight bar, undercut the HVC level, undercut the 20-day EMA, rallied and closed above both of them. Open and closed are right on the same price. Nice doji bar there. Just looking for a breakthrough. Friday's high as a potential entry. Stop would be the low of Friday or the 20-day EMA. And this is about as tight of volatility that you're going to see on this name. I think ADR of 13%. So very volatile name. Finally got a nice tight day. We want to play that expansion. SMR, speaking of volatile names, this one has ADR of basically 11. This is a nuclear stock that I had to switch out for NVIDIA from that leaders list just because it's a little bit too volatile, not a institutional favorite type name. You can see a lot of wide bars there. But now we're starting to see a pullback into the 20-day EMA, into that support gap. We're just looking for an undercut of both of those at 36.50 as a potential entry point. Stop would be the pullback low, which would be $35. Put your stop under 35.02 or so. NXT, talked about how solar stocks, I think, might have a nice run in the second half of 2025. This is, to me, the leader in that group. IPO name that hasn't had a big sell-off like the others. Basically just been chopping since it IPO'd and right near all-time highs now. So Thursday, we tried to rally, kind of wicked down. Friday, traded sideways while the rest of the stocks in the solar ETF We could go to them really quick. ENPH down 5%, SEDG down 1%. NXT only down 0.4%. And we came into the 20-day EMA, rallied a little bit, and then closed above that. This you could buy with an undercut and reclaim of the 20-day EMA and that support gap, or through Friday's high. Either way, stop would be, if you're buying on strength, my stop would be that 20-day EMA. Buying on weakness, my stop would be kind of below Wednesday's low, 56.25 there. But this is the solar stock that I'm focused on for that group. QFIN, we talked about KWEB being a potential ETF that gets going. This is one of the strongest stocks within that group. We have kind of like an inverse head and shoulders here, just basing out. Really strong action overall. Ran from $14 up to basically $50 and then just traded sideways. Didn't give up as much as all the other stocks in the market when we had that trade war with China. Who knows if that starts up again? That would be obviously not good. But QFIN, a couple undercuts in the 50-day, then a higher low, got nice and tight. Tuesday was the real buy point. Since then, we just had a pullback into that 5-day moving average. Nice and tight price action on Friday. Looking for a break over Friday's high, stop at the 10-day EMA, or pullback to retest that 20-day EMA and gap zone. That would be A plus to me, but either way, this is a name that I'll be trying on Monday. MSTR, we've talked about Bitcoin starting to shape up a little bit. This has gone through kind of a phase of relative weakness. Whenever you get that, I don't want to be buying on strength. I want to be buying on a shakeout when you have a relative weakness phase. And it helps you avoid stuff like we saw on Friday, where we rallied into the resistance gap and then squatted the rest of the day. Looking for an undercut of the gap zone under the 5, the 10, the 20, and the 50-day moving average. And then my stop would be under the other gap zone at 36.60. 366. CrowdStrike, we got the 10-day EMA and gap zone for that undercut and rally versus the 20-day EMA. ORCL tightening up super well above the 5-day EMA or right at the 5-day EMA. Looking for an undercut of the 10-day EMA and gap zone as a potential entry there. TEM, this stock has been super, super frustrating to trade. So when it does get going, I'm sure it's just going to rip and continue to rip. I've tried it a couple times, basically break even trade, 1% loss, 2% loss here and there. But I do think once it does get going, it's going to be a name that, because it's frustrated so many people, that it'll have that ability to actually run here. So looking for a break over Friday's highs, potential entry point, stop below Friday's low. Last long setup to watch is LEU. This is an energy, oil and gas stock. Good shakeout on Thursday, then a higher low inside day on Friday, undercutting that support gap. We're just looking for another undercut of the support gap, maybe the 20-day EMA as well at 160 as a potential entry versus Thursday's low as our stop. Next, we go to the short setups, and it's a really strong market. If you're not getting any traction on the short side, I would not be taking more shorts, or I'd be doing so with less position sizing. So with this, there's a couple of names here that are relatively weak that I think could have the ability to roll over. And then a couple like AEVA that has just gone basically straight up. And we're looking for a blow off top with these. Those are a little bit trickier to trade because, I mean, this stock is not doing anything wrong. Don't get me wrong. If you're in the stock, it is acting absolutely perfectly. But we're starting to get extended about 100% from the 50-day moving average. From the 200-day, what would that be? 36 divided by 7. We're getting really extended from the 200-day. So with this, I'm looking for another gap up, big intraday move, and then a loss of the VWAP, the daily VWAP, as a potential short entry, and then my stop would be the high of day. Again, these are really tricky to trade, so if it's not in your toolbox, don't trade it. Just something that I'm watching for as kind of a potential blow off top with the indexes a little extended as well. VSCO, Victoria's Secrets, kind of the flip side of that. This is a stock that's gone through a giant phase of relative weakness. Even while the market's strong, you can see from this earnings, big sell off under the key moving averages, traded sideways, had one day up into this resistance gap, more relative weakness, and then Friday with the market strong, tried again, but failed at that 20-day EMA. We're just looking for another rally into that resistance gap area, and then put my stop above the 50-day moving average, above $20 round number, right at 2020 as a 1 or 2% stop there. DXYZ, similar to VSCO, relative weakness phase, actually closed under the gap up from Thursday's candle, closed under the 50-day moving average, and now looks like it can start to accelerate to the downside. Lots of lower highs in here, couple gap downs, not what you want to see if you're long, but if you're short, this is how a quality short setup starts. Looking for a short entry through Friday's low. Stop would be the 20-day EMA or $40, whatever you want to use there. TSSI, similar to AEVA, not doing anything wrong, completely acting how you would want to see a stock that you're long react. Has rallied from $7 up to $30, getting a bit extended here, but it is an IPO. So, like, those in a speculative market like we're in right now can run and continue to run. We had an inside day on Friday. I think you could buy it on a gap up that takes out Friday's high as a short-term trade, a momentum burst traded alongside. Might be a trade that I even take to the long side. But if we get a gap up, big rally, and then we lose the VWAP intraday, then it's something that I could see shorting. Or if we get a gap up Monday and then another gap up on Tuesday, then I would start to really look at that as a blow off top short. But again, IPO stock in a speculative market like we're in, with indexes at highs, you can't stay wrong on these. If you're going to short them right with very tight stops. And if you're wrong, get out because these stocks can have 20% days very easily. SMMT, this is a name that's been on the short watch list for a while. Had this kill bar on April 25th, down 36%. Just traded sideways. Another gap down through the 200-day moving average, down another 30% on May 30th. Trading sideways. And then on Friday, we lost the 200-day moving average right at the support gap zone. Just looking for a break under that area as my entry. Stop would be the high of the day on Friday. It is biotech, so I would take that with smaller size, especially if you're going to try to hold overnight, but still a short potential there. APP, this was one of the market leaders basically since 2023, rallied from $9 up to $500. And I see a lot of traders see the stock bounce off the 200-day moving average and then say, okay, it's going to go right back into leading again. But after you make a move like that, it really takes a special stock or a very long time to base before you have a quality uptrend again. And you're just not seeing it. You see a gap down after we made a rally high, kind of wedged into the 20-day, fell through that, tight action, accelerated down to the 50-day, bounced to the 20-day, and more relative weakness. I think this is a stock that a lot of people are probably falling in love with because of the $900 to $500 move that it's already made. And they won't be ready for any more downside action. So this is one where hopefully we get a little gap up on Monday, a little rally, even like an uppercut of the Thursday and Friday's highs would be perfect. And then enter on a VWAP loss, enter on an opening range break loss, anything like that. But stop would be that 20-day EMA at 360. RCAT, speculative name that has a major gap down, lost the 20-day EMA, mini rally into that area, and then some weakness on Friday. We did undercut and hold that support gap, so we'll be looking for a break through that zone as potential short entry, and then stop would be at the 20-day. INTZ, this is another speculative name that I think might be putting in a lower high. It's still a little early to tell. We had an outside down day that closed above the 10-day EMA. But whenever you have kind of like this type of action down to the 20-day, lower high rally, and then an outside down day, that tends to mean that momentum starting to dry up. But in a super strong market, this is going to break to the upside. So this is whether you trade it or not, this will be a good stock to put on your watch list to see if momentum is still hot in the market or if we're starting to see momentum dry up a little bit. RR, same kind of deal. Speculative name that had relative weakness. This was on the short watch list all through this resistance gap zone at 250. It eventually broke down, lost the 50-day, came all the way down to 170. So really good flush if you were shorting within that zone that we were talking about. Bounced at the support gap, 200-day moving average, rallied up to the 50-day, opened on that area on Friday, and then just sold off the rest of the day. So to me, this is still a speculative name that is not acting well, even though there is this support gap zone. I'm looking for a little rally up into the 20-day EMA as an entry point, like an uppercut and fail of the round $2, and then stop would be like 210 or so. I don't want to risk too much on this. I want it to kind of work right away. And then Palantir, a couple different ways to play this. You could play this on the long side if we get a gap up, opening range break like we saw on June 6th. Because it's the second one, because the indexes are already extended, because we're starting to see like speculative names, AEVA, TSSI, like monster moves already. I think this could be a potential short if we have that gap up, maybe a mini rally intraday, and then roll over, lose the VWAP. That would be the entry, would be a loss of the VWAP. Stop would be the high of the day from that day or the 5-day moving average right around 139. And then see if you can just play it for a move to 118 area, this undercut of the 50-day moving average into the support gap. So that's going to be the weekly prep video for June 30th to July 3rd. Again, market is closed on Friday for the 4th of July, so enjoy the long weekend. Go USA, and I'll see you guys in the next video. Take care.